Q1 FY 23 earnings conference call hosted by IIM Technology. As a reminder, all participant lines will be in the list, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ranjit Chirumalla from IIFL Securities Limited. Thank you, and over to you, sir.
Thank you, Ranjit. Good evening, everyone. Thanks for joining us for Deepak Fertilizers Q1 FY 23 earnings conference call. Today we have with us from the management Mr. S.C. Mehta, Chairman and Managing Director, Mr. Mahesh Girdhar, President Crop Nutrition Business, Mr. Tarun Sinha, President Technical Ammonium Nitrate, Mr. Amitabh Bhargav, President and Chief Financial Officer, and Mr. Deepak Fertilizers, Head Investor Relations. I would like to invite Mr. S.C. Mehta to begin the call with his opening remarks. Thank you, and over to you, sir.
Thank you. Very good afternoon to all of you. I take indeed pleasure in welcoming you all for the Q1 FY 23 earnings conference call of Deepak Fertilizers. I hope you all have had a chance to look at the financial statements and earnings presentation uploaded on the exchanges and our website. So, at the outset, let me share my joy in bringing to your attention that we've seen in Q1 the revenues crossing 3,000 crores and an almost 59% jump over last year same quarter. But beyond that, the profits across 436 crores, a jump of 233% over last year. And we saw almost over 87% of our segment profits were contributed by the chemical segment. And all of this despite a huge jump in all the raw material costs that we saw. So, obviously, two aspects that could emerge in anyone's mind, and I thought I'll share some of those insights, and then, of course, draw Amitabh, our CFO, to take you through the details. So, if I were to look at three undercurrents, besides, the price increases and the broad turmoil that all of us are seeing because of the Ukraine war and other things. But if one were to look at a fundamental level, there are three undercurrents that I saw. So one is at the macroeconomic level, we continue to see an excellent alignment with the India growth story that all our businesses are having, and particularly the chemical segment. So be it mining, infrastructure, or China plus one shift, all of it, bringing in a good positive undercurrent, which is going to be ongoing. And despite such price hikes even in our finished products, one aspect that was evident was that there was no demand destruction, and actually it was to the contrary. The other aspect that we noticed was there is a resilience in the downstream industry to absorb some of those prices. So those were, I would say, deeper insights. The second insight that we saw was that whatever investment that we have made in strengthening our operational efficiencies, our systems and processes, our supply chain management, all of it got tested. And all of it, despite the COVID, despite the geopolitical situations, it, stood the test of time. So that was the other undercurrent that we saw very clearly. And the third, of course, has been our continued drive to move from commodity to specialty and giving now more customized solutions. That also we are seeing that it is beginning to bear fruits. So if one were to look at what next, what is likely to be the situation as we look at Q2, Q3, Q4 and the rest of the year and maybe years ahead. So one aspect that we see is that we do expect, this kind of a heated situation on pricing to mellow down. We expect lowering of both finished goods pricing as well as the raw material pricing. Now, as is normal, that there could be a gap of a month or two between the two. And if the finished goods pricing drops faster than the raw material, it may impact the delta temporarily. And if it's the other way around, it will continue to ensure robust delta. But it is a matter of a temporary adjustment of a couple of months. We do also expect the normal standard damping in the chemical mining sector during monsoons. But that is also a typical phenomenon every year. Having said that, there are again three aspects that I see which will provide a positive thrust for the current year. So number one that I see is the additional capacities emerging out of our operational efficiencies and debottlenecking will come in handy, which will kick in the balance part of the year. So that is going to be a positive thrust. The second is at an operational level, our continued drive on strong digitization, applied R&D thrust to achieve not only operational efficiency but also customizing, customer orientation. That is going to keep unfolding over the next many quarters to bring in a better positioning. And lastly, on a continual basis, our management strategy change, where for each of our businesses, this move that we are bringing in from commodity to customized specialization, that is going to continue to give us better brand creation and premiums. And that if you would have seen in the quarter that went by, and of course the quarters that are going to follow, in the crop nutrition business, we are bringing in crop-specific grades more and more. We are branding it as crop tech. And it is not just NPKs, but NPK plus micronutrients. And, plus a package of practices which are going to be focused on specific crops. Even on the acid business, we are now looking at repositioning some of our products, customizing it to the solar grade nitric acid or steel grade nitric acid. Even in case of IPA, instead of a commodity IPA, we are looking at focusing on specifically on the pharmaceutical sector and also introducing the medical wipes and the sanitizing system for hospitals. Even for the mining sector, in case of technical ammonium nitrate, instead of just focusing on the product, we are now moving towards TCO, that is total cost of operations for specific mines, and bringing in composite holistic solutions as we go forward. So these are aspects which are going to continue to give, I would say, positive tailwind as we see the balance here. As far as projects goes, the ammonia project continues to be on a fast track execution mode, and we are looking at, with that coming in, it will bring a solid foundation for all our three businesses to contain the raw material volatility and also, of course, bring in attractive IRRs by itself. And we continue to expect it to be commissioned by fourth quarter FY24. I must share that the ammonia project will be giving us somewhere close to 25,000 crores of Atmanirbhar or import substitution over the next 10 years, plus a large reduction in the carbon footprint. So we are very happy to contribute to the larger interests of India in that fashion. Similarly, our TAN project work has begun at site, and there again we target to complete by second half of 2024. And that you are aware that it is based on solid demands from the coal, limestone, cement, infrastructure sector. So with the above two projects, we will in that sense complete our strategic capex drive based on, if you recall, we had, two drivers, strategic drivers there. One was to get our site right. So with this now fertilizers, we have invested, triple our capacity, acids we have invested, and we are probably Asia's largest. With the TAN coming in, we will be among the world's top 3. And then ammonia coming in to feed all the 3 businesses. So both these aspects, getting our size right and capturing the value in our complete chain, that will get completed with this CapEx, getting implemented. So what will follow will be our strong forward integration drive, moving from commodity to solution specialty. And that will, of course, unfold quarter on quarter, as we work harder to customize each of our products to the specific needs of each of the end segments. So with this overview, let me hand you over to Amitabh Bhargava, our CFO President Finance, to now take you through the nitty-gritty details of how the quarter went by. Amitabh?
Yes, thank you, Mehta. Good afternoon, ladies and gentlemen, and thank you for joining the Deepak Fertilizers and Petrochemicals conference call to discuss Q1 FY23 results. We maintained our growth momentum while concentrating on transformation initiatives, and in fact, Q1 was our best ever quarterly performance. We reported a total operating revenue of rupees 3,031 crores, an increase of 59% YOY compared to the same period last year. Our operating EBITDA augmented to rupees 740 crores compared to rupees 290 crores in Q1 FY22. Operating EBITDA margins expanded significantly to 24.3% from 15.2% during Q1 FY22. Our net profit for the quarter recorded a growth of over 233% YOY to rupees 436 crores with margins of 14%. Chemical segment, as Samantha was also mentioning earlier, contributed to about 87% of total segment profit. Going into a little bit of a details in chemical segment, during the quarter, our manufactured specialty chemicals business recorded a revenue of 1,771 crores, an increase of 95% compared to Q1 FY22. Segment margins expanded from 19% Q1 FY22 to 41% in Q1 FY23. Manufactured assets for the quarter recorded a revenue of rupees 424 crores, an increase of 156% versus last year, and manufactured ICA recorded revenues of rupees 98 crores. Manufactured mining chemical business recorded a revenue of rupees 1,078 crores, an increase of 177% YOY during the quarter. Mining chemical business volumes were supported by continued demand from coal, as reflected in Coal India and SCCL's overburden performance. EN has ammonium nitrate melt volumes grew by 39% YOY, high density ammonium nitrate by 15% YOY, and low density volumes declined by 16% YOY. During the quarter, our ICA plant operated at capacity utilization of 58%, and those assets and TAN operated at 91% and 111% respectively. As far as the fertilizer segment is concerned, the revenue grew by 26% YOY, although segment margins were largely impacted on account of sharp increase in raw material prices. With steep increase in raw material prices such as ammonia, phosphorus, and MOP, the production cost of fertilizer has been significantly high compared to the same period last year. NP and PK, inclusive of our PropTech, recorded a sales growth of 36% YOY to rupees 1,121 crores in Q1 FY23,
and Venture sales increased by 109% YY to rupees 52 crores in the quarter one compared to quarter one. In fact, 52 crores increased by 52 crores, or increased to 52 crores, I'm sorry, in Q1 FY23. NPK plants operated with utilization levels of 75%, and Venture plant operated at 76% utilization level. The available capacity across our plants provides us headroom for future growth potential. I think with this I would stop the commentary and we'll be happy to take your questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jenish Gada, an individual investor. Please go ahead.
Good afternoon, and congratulations for a good set of numbers. And my first question is regarding EBITDA margin of 24%. Will it be maintained in near term and future term? When will the margin will be maintained when the two new plants get started in FY24? And second question is regarding in investor presentation. In one of the heading, renowned investor, one investor name is Dolly Khanna is mentioned, but in investor means I am not able to show in holdings the name of Dolly Khanna.
To your first question, I think Mehta he did touch upon this aspect that while this quarter we saw significant increase in both raw material prices and finished goods prices. The encouraging part was that they go through demand destruction, and each of our products, by and large, the demand remains strong. So I think that is one aspect that we believe and we are confident that is what is going to be the case in coming quarters. What happens to raw material prices and finished goods prices, as I was also mentioned, there is always tend to be a lag, a lead in terms of passing on of some of these raw material prices or so to that extent, it's very difficult to say what could be the EBITDA margins going forward. Q2, as we mentioned, is generally a lean quarter for us, particularly in the chemical segment. And to that extent, there is obviously the demand side because of monsoon in both our chemical segments. Nitric acid and TAN is likely to be weakened. So I think that is pretty much what we are in a position to comment at this stage.
Yeah, can you give the margin? Means if we are not able to maintain 24% margin, can you give the lower base margin as per management expectation?
We are not in a position to guide anything. You would appreciate that the whole geopolitical environment is so uncertain that at this stage for us to predict sitting here what would happen in the balance 3 quarters is very, very difficult. So we would refrain from.
Company has a long history, so it must have any prediction or it will. In the worst case scenario, our margin will be this much percent and all.
And like I said, we would refrain from giving any guidance on margin, given the kind of volatility we are seeing in both finished good and raw material.
Okay. And regarding that investor presentation, investor Dolly Khanna name is mentioned, but in holdings I am not able to see Dolly Khanna name.
So basically, we are looking at BSE. BSE provides the investor details only above 1%.
For the other details, you can write to us separately and we can provide you with the top 200 shareholder register for your reference.
Okay. So in where I have to write?
You can write to me and copy to company secretary. We'll provide you the necessary details. Our details are at the end of the presentation.
Okay. Yeah. Thank you.
Thank you. Next question is on the line of Abhijit Kera from Kotak Securities. Please go ahead.
On very good results. Just one main point to seek your clarification on. It's regarding the debt position at this point in time as of June 30th. If you could please just help us with the gross and debt number. And also how much capex has already been executed on the ammonia project and how much is pending to be spent.
Yeah. So as far as ammonia is concerned, or let me first answer your first question, that is our gross debt is about 2,900 crores and net debt is about 1,930 crores. Those are the numbers that we view. As far as ammonia capex is concerned, out of 4,350 that we have estimated, we have already spent a capex of about 2,850 crores. And therefore the balance, 4,250 minus 2,850 is what is yet to be incurred, which largely will get incurred in completing the project. As we mentioned that it's likely to be commissioned in Q1 of FY24.
Understood. So, I'm not sure if you are in a position to sort of look ahead until the end of the year, but would it be reasonable to conclude that net debt by the time of the project is commissioned, the ammonia project, will probably be less than 3,000 crores at the end of it?
Well, difficult to say, but ammonia, like I said, we need to incur roughly about 1,500 crore additional. And out of this, roughly, I think half of it will come by way of debt and half of it will come by way of equity. So as such on ammonia, gross debt perspective, it will add about 750 crores by the time the project is complete. But when it comes to net debt, I think it will all depend on our internal cash generation and cash position. So I would be able to give you any capital debt.
Great. That's very helpful. And one last thing was just in terms of the situation on the ground in terms of gas prices and ammonia prices. So what is your thought process in terms of finalizing any gas contracts and how are you seeing the economics for the ammonia project at current market levels? Thank you so much.
So at current market level, as much as the gas prices are elevated, even ammonia prices are high, and I mentioned that in earlier calls also, that at the current prices, including the state incentive that we have where we get 9% SGST reimbursement, till we recover 75% of our capex, and now the energy related benefits that we have in the new project. The margins are currently at, I would say significantly better than what we had when we had started the project, almost in the range of $400 to $500 per ton. As far as gas and ammonia prices are concerned, we would appreciate that gas is also getting driven by what's happening in Europe, particularly because of Russia-Ukraine war and the stand taken by Russia on supply of gas to Europe, and therefore Europe also trying to bridge the gap through various LNG transport from US and other geographies. So I think that aspect of it is honestly we are seeing pretty much every 2-3 weeks there is new development. Very difficult to predict. The second factor that may affect the gas prices also is how severe the winter is as we move into winter for Europe and US. I think all of those aspects will play a kind of a significant effect on gas prices and to an extent ammonia prices, because ammonia prices are, given the incremental cost of marginal cost of production of ammonia is dependent on what's happening in European gas prices. There is a level that there seems like a strong linkage at this moment between these two commodities. But it's very, like I said, every 6 months, every month is a new development. Very difficult to predict what might happen.
Understood. Thank you so much, Amit. I wish you all the best.
Thank you. Next question is from the line of Viti Dadia from Deepak Fertilizers. Please go ahead.
A broader picture. Hello. Hello. Hello.
Yeah, go ahead.
Hello. Are you able to hear me?
Yes, we can hear you. Please go ahead with your question.
Okay. So my question is, can you help us with the volume and realization trends in TAN and nitric acid for the next 2 quarters? A broader picture.
Can you repeat?
Hello.
Can you repeat your question, please?
Sure, sir. Sir, can you help us with the volume trends in TAN and nitric acid segment and also the expected realizations, the broader picture, sir, for the next 2 quarters?
The only point that I can confirm or guide at this stage is that Q2, as is the case every year, is a quarter where demand for both TAN and nitric acid typically is on the lower side, because in nitric acid, again, the inorganic nitration segment is also linked with what happens on the explosive side. And to that extent, Q2 is likely to be a weaker quarter compared to what we saw in Q1. But beyond Q3, Q4, I would go back to a point that I also mentioned and we've been saying that we are seeing good demand both on the explosive side as well as on nitric acid side. Explosive driven by coal as well as infra and cement segment. And nitric acid largely by nitration segment, which again is somewhere we think that China plus conscious and a lot of our downstream customers are seeing very strong demand of their products and their order book. I think that with that directly, I think Q3, Q4 we expect the demand to continue to remain lower. I think that's pretty much what I would be in a position to say at this stage.
Sure, sir. Thank you so much and congratulations on a good quarter and the right direction. Thank you, sir.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Next question is on the line of Chinmaya Bhargava from Chetan Capital.
Nice to meet you. I hope you can hear me.
We can hear you. Please go ahead.
Okay. Yeah, so I have a couple of questions. I'm not going to ask about TAN realization, but a majority of our nitric acid is consumed in-house, right? So if I'm continuing to look at, let's say, solar grade nitric acid, does this fall in the concentrated nitric acid segment? And how much higher realization do you expect for solar grade nitric acid compared to
process of developing some of these products based on the requirement we are seeing in these segments. And therefore, it is till we establish the volume as well as what value add that we need to do, meaning that what is the additional cost to be incurred and what realization can be made. Right now, we are not in a position to guide you on the margin. But it's just to say the whole idea of getting into specific segments and changing to specific requirements of the end user is to basically look at value-based pricing. And that's what we expect that therefore the margins are likely to be better than the trade vanilla nitric acid.
And are we thinking about expanding our capacities in concentrated nitric acid after the tank capacity, or is it too early to think about that right now?
It's too early. Board hasn't taken any decision, so I won't be able to guide you anything on that.
No, that's fine. Next question. I've been hearing of the coal industry looking at a PLI scheme for TAN. Could you share if there's talks of that happening?
We don't have, we've been obviously because of the way PLI scheme was proposed by the government. We were also exploring whether that would be available for TAN, but as of now we don't have any firm views on that. We've also, like yourself, we've also already been inspected. So I don't have any firm to reach.
Okay, but that's fair. Last question from my side is, could you just tell us about the consequence of the income tax issue that we had for 500 crores? I know we said we're confident of defending it, but if you could give me some details on why we're confident and where this comes from. Thank you.
So essentially, most of the demand is a consequence of disallowance of goodwill and intangible, depreciation on goodwill and intangible. And that both on the judicial precedent and also the fact that in Finance Act 2021, government has prospectively disallowed depreciation on goodwill. And that is the reason we believe that retrospectively, when we had claimed depreciation on goodwill and intangible, is something that would be defendable. And that is where our belief that this would not have any, I think, fundamentally it's a legally defendable case.
Okay, there won't be any outlay until it's challenged in court and it's heard in court, right?
At this moment, we have to discuss with the department that whether before appealing at the next stage, would there be a requirement for any deposit of tax. But in the worst case, that will not be more than 20% of the demand made by this department.
Okay, so worst case, our balance sheet will look like it did last quarter because from the debt levels that you've mentioned, it looks like our net debt is still roughly the same as what it was last quarter, and we got about 400 crores of cash.
Yeah, no, so I don't know what is the link between the two, but what I can confirm is that given that the demand made by the department is for 569 crores, the maximum that we may be required to deposit is 20% of the roughly 300 odd crores. But that depends on if we would make an appeal for even that the amount is plus. We see how what the presentation is going to give us. And to that extent, the maximum amount was this stage till we were to next stage of appeal.
So
how do we see the end prices compared to last quarter? Compared to last quarter, these things are 10 to March, and from April to June. So is the prices have gone up, or is it just that the volume ramp up has helped you clock more sales or profits?
Quarter on quarter, we have in fact reported in our presentation the revenues from TAN. Quarter on quarter, the increase in volume as far as TAN is concerned is about 12%. So you can a back calculation to see how much of the increase in revenue is because of volume and how much is because of price.
And price will be what? How much increase will be done with the price you can tell?
No? And that's why I think that the volume has gone up by 12%.
Yes.
The revenues from TAN segment last year, last quarter, this quarter. That extent we could take to a back calculation to see what the per person or rather NSP would have gone up by both quarter and quarter and why is that? So, thank you.
Thank you. Next question is on the line of Darshan Javeri from Crown Capital. Please go ahead.
Hello, sir. Am I audible? Yes, please. Yeah, so congratulations on a good set of numbers, sir. I just wanted to ask, after project completion, what kind of revenue can be foreseen for the next year, or something could that be available to be guided, or what would be the benefit, or if not the revenue, then the benefit of the new ammonia plant?
I think that ammonia would largely be for our own consumption. So on a consolidated level, it would not lead to increase in revenue, but it would, depending on the margins that we make in ammonia projects, it is the ammonia gas delta on which axis, earlier I answered that question. That seems to be like the improvement as far as the margins or bottom line is concerned. But from a revenue perspective, it is on some level it will not as such result in because we call for entirely for our own gas system.
Okay, thank you for that answer, sir. And we've seen very good growth in this quarter one, sir. So how much of it would be sustainable going forward? Our demand is, we don't see any problem in demand, so the revenue in quarter one could be sustainable?
Revenue, I think two aspects that you mentioned, and I would again draw your attention to those. One is that if you look at the capacity utilization in some of our segments, there is still a good rate available in terms of better capacity utilization. So the demand, with the exception of Q2, which has its own sort of demand reduction aspects in chemical segment, but with that exception, if the demand continues, which we are confident it would, then the capacity utilization in these segments, there is a headroom. Also, we are, and we've already done debottlenecking of gas as well as NPK capacity, and that also in terms of would play a role in terms of improvement in our top line. But I think other than that, price-wise, we just mentioned that price. Of course, it's very difficult to predict. It also depends on what happens to raw material prices and its consequent impact on the finished price. So I think we should maybe take guidance more from the demand side or volume numbers that are ready to pan out in the next couple of quarters.
Okay, thank you so much for that answer on my questions, sir.
all the best in the next quarter. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you must press star and one to ask a question. Next question is on the line of Sharon Natiko.
Hello. Yeah. Thank you for the opportunity and congratulations for a good set of numbers. So my first question is, for the remaining CapEx, you mentioned that 50% will be the equity, whether it will be QIP or something or any other mode of the funding?
No, it's largely through internal generation. It will be largely through internal generation and the existing cash balance that we have.
Okay. Thank you. And another question is, in the previous 2 quarters, there was points raised on the non-core sector, commercial property, whether that's going to happen in next 1 or 2 quarters or still not on the discussion?
The reply to that remains the same that one is we are trying to remove all the regulatory, I would say, blocks that are there to make sure that any potential monetization of that is done at the full potential. And the second is, given that currently, as such from a balance sheet perspective, we are fairly comfortable. We will see the right timing of that if we go in the process of completing our CapEx and the funding requirements.
So, and the last question is, the company is offering to the solar and steel sector, the chemical. So I think someone asked the question and we responded saying that it's still in the development process. So my question is like, once let's say, considering the huge growth potential in solar and steel in the next few years in India, do you have an existing plan to scale up the chemical, like once your invention is done, or like you need to even plan the CapEx for that sector as well, for the specialty chemical for those 2 sectors?
Those 2 sectors, we are looking at product development, both largely in nitric acid segment. So as such volume perspective, it would go out of the existing volume or some of the specific capacity utilizations that we are targeting. But beyond this, as I was mentioning, that there is no decision as of now to increase the capacity or any CapEx in nitric acid. As and when that happens, we will be informing the
Yeah. Thank you, sir. Thanks for the time. All the best.
Question is on the line of Tarun Tingla, an individual investor. Please go ahead.
Good evening to all participants. So my question is that you have a non-core asset of around 700 crores. They have been giving me notice since the last 4 quarters. Why don't you exit from that non-core asset and reduce the debt? I just answered that question. And we will take your sentiments back to the bank. And second question is that when my company is going to get a factory? Sorry, can you repeat that question? When my company is going to the factory? I mean, what time span you are taking that Deepak Fertilizer would be that free? If you see today, even from a gross debt, net debt perspective, we have the numbers. We have sort of cash balance practically, but given that we are in a CapEx mode, both on ammonia and TAN, we are obviously can be completely CapEx. We would be cautious in repaying our debt ahead of the schedule. cash would either have to go for next round of growth or it is for repaying the debt. There is no reason for us to hold that cash in our books. I think largely one would have to see how the capital of these two projects is let's say about 24 to 36 months, and also in terms of cash business. Based on that, we certainly would be asked to take them. Okay, thank you very much.
Thank you. The next question is on the line of Madhav Narda from Fertility. Please go ahead. Madhav, please go ahead with your question. As there is no reply from the line of Mr. Madhav, please go ahead with the next question. The next question is on the line of Mr. Karthik, an individual investor. Please go ahead.
Yes, good afternoon. Am I audible?
Yes, hi.
Yes, good afternoon. Firstly, I'd like to congratulate you for a very good set of numbers. I have two questions. In the opening comments, the chairman mentioned regarding the pricing of the chemicals, wherein there would be sometimes a lag, wherein the raw material prices may rise, but the finished product prices might not rise, and the other way around. What I would like to know is that in this quarter, have you had the benefit of the raw material prices going down and the finished product prices not coming down, or vice versa? And my second question is, you made us understand regarding the price of gas and ammonia. What I just want to know is the company assured of gas supply when the ammonia project starts?
So, to your first question, as I said that, if you look at the volumes in chemical segment, both TAN and acid, you can also look at what the margin has been or compared to the volume growth, what has been the overall sales growth. And to that extent, yes, I think that the margins have expanded, and so it's obvious that the finished goods prices have obviously compared to raw material prices, finished goods prices have been higher expense. The second aspect on your question on the gas availability. Gas availability per se is not a challenge even today, because India has enough LNG terminals and therefore export capacity. Also, both ONGC, Reliance, what we understand based on the progressive auctions that have happened from their fields, they also have the plans to increase their production profile. A combination of both domestic and imported gas, if there is enough availability, it is more about at what price is this gas available, and this is where I earlier mentioned that today, even at the current prices of gas, we also keep buying spot gas every quarter, incremental quantity based on our production profile and our internal liquidity center. We are buying gas at this price, price in our overall portfolio. And to that extent, some time, and what effect does it have, what kind of margins can one make with the current prices of ammonia is the aspect that one has to track, but availability is not an issue.
Okay, thank you. Thank you very much.
Thank you. Next question is on the line of Madhav Narda from
Yes, please. We can hear you.
Hello?
We can hear you.
Sorry, so my question was that, basically, could you help me understand the capex that we have for FY 23 and 24, given the projects that are ongoing at Ammonia and Batteries?
So in ammonia, which we are targeting to complete by Q1, let's say somewhere in May 23, we just to incur from here on, we have another 300 crore of capex in ammonia. As far as TAN is concerned, this year, this financial year, we would incur somewhere like 550 to 600 odd crores this year for TAN.
So that's 2,100, and then any other materials, so here the small capex for the existing lines in Sankara, so you could get the number for the future.
There is normal maintenance capex, and there is also we completed one round of debottlenecking in TAN. The second phase of debottlenecking, we are still awaiting the technical details, and depending on that, so the numbers are not going to be very big as far as debottlenecking is concerned, but those would be the additional expenses beyond the TAN and
Would it be fair to say that the capex for FY 23 should be within 2,500 crores, including the debottlenecking and the beginning?
Yes.
Okay. And then FY 24, what does that look like? So ammonia should be largely complete, and then you would have TAN with
Ammonia would be largely complete, and by that time, I'm assuming that we would have incurred, let us say 600 odd crores in TAN from here on. We would have completed almost 1,000 crores in TAN. After that, over next 18 to 20 months, we would incur the balance of the ammonia.
Okay. All right, sir. Okay, thank you so much for that.
Thank you. Next question is on the line of Deepak from please go ahead.
We can't hear you. Can you speak a bit aloud? Hello. Go ahead, but we were not able to hear you earlier. Can you? Yeah. Not very clear. Yeah.
Speak a little louder.
Yeah.
So can you share the segment-wise margins for TAN and nitric acid both?
We don't report segment-wise revenue for chemical segment as fertilizer segment. And we've already shown that in our services.
Thank you. Next question is on the line of Nishin Shah from Equitas Investment. Please go ahead.
The Congress on this great set of numbers. There are only one question. In Q1, you highlighted we faced some issues which impacted our capacity utilization. So in Q2, are we facing any issues?
Sorry, what? Could you repeat that question?
Yeah, in Q1, we highlighted in our presentation that there were some issues which impacted our capacity utilization. So in Q2, are we facing any issues?
So in Q1, one effect was of raw material, raw water shortage, which was because of MIDC had taken some maintenance shutdown of their pipeline. Now that is over. Such that is unlikely to affect. The other aspect of we had MOP shortage in quarter one, and that is now better compared to Q1.
Okay. That's it, sir. Thank you.
Thank you. Next question is on the line of Priya Purohit from Kamayakya Wealth Management. Please go ahead.
Hi, sir. Thank you so much for taking my question. So, I can clearly see that, since if I compare to FY21, the chemical segment has been contributing quite significantly to your bottom line specifically. So, just wanted to understand if, do you have any plans for doing any capex for the fertilizer segment, or probably entering into some niche fertilizer segments which are, maybe not NPK based, maybe something like potassium based fertilizer, or just wanted to know your outlook on that, sir. Thank you.
No such plan or decision taken on board.
Okay, all right. Thanks a lot, sir. And secondly, just wanted to ask that there has been a sharp drop in IPA capacity utilization if I compare it with Q4. I think it has dropped from 88% to 58%. So, what's the reason for that, sir? Are you already experiencing the muted demand that you are saying, which you're foreseeing in Q2? Are you already experiencing those headwinds right now?
So, IPA had production challenges because of raw water, but other than that, IPA margins were under pressure. So we had taken certain sort of shutdown or non-maintenance in advance rather than waiting for the scheduled work.
All right, sir. So do you see the utilization level going up in the coming quarters now, considering that these shutdowns would have been a one-off event?
Yeah, we want to see the margins. There are two things that are playing out right now. One is because of the crude prices, the refinery grade propylene prices have gone up, while the IP prices seem to be have come down or at the base reflect the increase in prices of crude and propylene because the IP is paid to the other route as well. The second aspect is that we are currently also looking expansion of our product profile to into pharma grade IPA and a couple of other special applications. And to the extent there our margins are better than the plain vanilla standard grade IP. So depending on how we are able to ramp up the volume, the specialty grade, and what happens to the margin, our capacity utilization would be elevated accordingly.
Thank you so much.
Thank you. Next question is on the line of Shubham Tholar from Perpetual Investment Advisors. Please go ahead.
Good afternoon, everyone, and congratulations on very good set of numbers this quarter. So my question is related to our fertilizer business vertical. So we can see a quite subdued performance from this vertical this quarter. So how do you see this fertilizer business shaping up in the coming quarters?
So you see fertilizer consumption takes place during Kharif and Rabi, and in the first quarter, there is a bit of delayed rainfall. Start of the rainfall in the month of June was more than the previous year. Then it goes to July. From July onwards,
the proper rainfall, and we are seeing that the investment part of India where we have faced rainfall is even more, and we have expected very high still. So from that perspective, we digital see addition perspective, as well as the commodity price is good. And if you see as well as the question related to the financial performance, we have been in range of 10% year-to-year performance. From last quarter, we nearly doubled our income and deposit. Industry-wise, there was a little bit of reduction in the booking in the first half, but we have maintained our market share. As well as you may have noticed that we already launched next level of category, innovation category, the crop tech products, which are clean product with 8 nutrients, along with nutrient unlock technology. As well as we continue to launch in water soluble fertilizer business, also new products. So we are moving up on our innovation curve and continue to launch better products at the conference scale.
Okay, yes, sir. And just a small clarification. So, did you say that greenfield ammonia project is going to be commissioned by Q1 FY24? And plant is going to be commissioned by second part in FY24, is that right?
Yeah, so the ammonia project here will be in quarter 1 FY24. But end project would be the calendar year, second half of calendar year.
Okay. Oh, thank you for this condition on the rest.
Thank you. Due to time constraints, we have reached the end of question session. I would now like to hand the conference over to the management for closing comment.
Ladies and gentlemen, thank you so much for your participation. And for any further queries or clarifications, please do get in touch with our investor relationship team. Thank you once again. Thank you.
Thank you. On behalf of IIFL Securities.